The Taiwanese index is trading with losses of almost 1%, as is the Hang Seng.
योग दिवस लगातार नए रिकॉर्ड बनाता जा रहा है.
First, with a $16.5 billion, there's a down 1% in US dollar terms.
The Nifty is up 35 points, so looking good.
Post the election day fall, we have seen markets make a very strong comeback.
It is turning out to be a Friday, which was not something that the bulls would have liked. Nifty is down 150 points from the highs of the day.
It shows you that technology moved from something that the techies did to impacting every one of our lives.
Spaces where customers have always clamored for Meraki, but we've both been very cautious about, bringing Meraki to those markets and those customers.
Most of the FTSE additions were already announced on May 24th.
Well, it is a sharper fall than what we had seen in the morning. 103 points down on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was the day so far. Hello and welcome. You're with us on Closing Bell, and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Sonia Shnoy as well as Manglam Malu. So, guys, we're wrapping up the week, a week that's been really quiet because if you look at the tally so far, Nifty is absolutely quiet. Midcap index maybe about 0.5% higher. Banks have been the story, but I guess as of now it's slightly, you could say, maybe a little inconclusive because the market's not falling, but that rapid rise kind of has come to a bit of a halt.
I think consolidation, right? Yeah. That's all you can. I mean, that's the word you can use. For the last many days, we've just been ambling around this 23,500 mark. There was so much traction last week and the week before that this market is just cooling off. Today, of course, the market is down about 100 odd points. The Nifty is down about 100 odd points. But if you see the chart, you'll realize that it's still just ambling within that very, very tight range. The Nifty Bank also just about ambling, and the mid-cap's absolutely flat. So not too much happening at the moment. But by and large, you'd have to say individual stock-specific action.
Individual stock-specific action, indeed. In fact, I was just looking at a couple of levels on the Nifty itself. And this morning, we spoke about Nifty facing supply upwards of 23,600, right? Look at the three numbers that come up for you. Day before yesterday, the high on the Nifty, 23,664. Yesterday, 23,624. Now, 23,667. Pretty close to what we saw earlier as well. And from there, the Nifty is actually corrected about 200 points from the highs. What is the one leading the correction? It is the Nifty Bank. After doing extremely well over the last two trading sessions, maybe some give back on the Nifty Bank. Rallies on the Nifty Bank also being sold into. The good part is that IT and metals are holding on, and as a result of which they've supported the Nifty at lower levels. In fact, the Nifty saw a recovery from lower levels of around 23,400 today as well. So it is in a range. It is consolidating, volatile in that range, and that's exactly what the street is playing for as well. Next Thursday, we will have the June series expiry, and the markers are placed at those levels itself. 23,600 call has a premium of what? 100 rupees. So 23,700 is the upper side of that range, and at the lower level you have the 23,500 put, again a premium of 100 rupees. So option writers are playing for 23,400 to 23,700. That seems to be a bit of a range on the Nifty.
Absolutely, I guess so. Range bound is the best way to describe it. On the mid-cap screen, don't be fooled by the index itself. The index is absolutely flat right now. It's not doing much, but in terms of individual stocks, there is action. Some buying has come back to PSU, so that's telling you that PSU trade is not dead at all. In fact, on the volume charts today, once again, some of the railway stocks have been looking good. RailTel is up about 10.5% higher. There's been Ircon. So some of these names are back up and about. Even on the private sector side, TexRail is up about 5% as well as IRFC, which is up about 3%. So buyers are going back to some of these momentum moves in the PSU side of the market. But aside of PSU, there's stock picking going on. Cera Sanitary, about 8.5-9% higher. Sirma is finding takers today. Sirma is up about 10%. There's Arvind Fashions, which is up about 6-7%. Lots of names: Venus Pipes, Inox Green, Alembic. So the point is, I think at an individual stock level, there's a lot of action. It's just that sectors as a whole are not moving, or the market as a whole is not really firing away.
Absolutely. And
just a word on the broader markets as well. You know, one chart that tells you the story of the day is definitely has to be the advanced decline chart.
Yeah.
When we started the show, when we started trade today, for instance, we had 1,600 stocks advancing for about 400 stocks which were declining. Those lines kept coming closer, and now they've intersected. We have the red line above the green one. We have around 1,100 stocks which are advancing, and the number of decliners have increased, crossed past the 1,100 mark, close to around 1,300. So that's, last 3 or 4 swerves that we can see in those crisscross lines has definitely told you about the market.
Okay, well, we have last hour of trade. So Mitesh Thakkar is joining in with some closing strategies. Mitesh, hi, good afternoon, and thanks for joining us. It's been a bit of a volatile day for the market, volatile week actually. It's been all over the place. But for the last 1 hour, last 55 minutes, what are you recommending, and what are the individual stocks to look at?
Yeah. So one, I think the market isn't looking very weak per se. It is a market which is doing reasonably okay, and my sense is that there is some kind of a profit booking kind of a move happening. I think as long as it doesn't show signs of correction, I would be pretty okay. Now the levels on the downside where this profit booking can be arrested would be one at 23,420. We are practically there. If that kind of gives away, there could be slightly a severe case of profit booking, but I still believe that 23,250, 300 zone should hold. So if you look at the overall index, it will still be less than 1.5% kind of a correction, but it could be choppy in the next few days. It could be a market which will be sideways, but with a slight negative bias, and therefore you will see some profit booking taking at higher pace. This is all due to the fact that this entire rally which started post the election result, on the hourly and the 2-hourly chart, we are losing momentum, and we are now, trying to come out of extremely overbought situation. So maybe a few days of consolidation is required. The idea should be to look at stock-specific cases to trade and wait for the index pullback to play out. So around 23,350, 250 zone is where I would want to see a reversal and then buy into the index. Till then, trading will be more stock-specific.
Okay, so let's talk about those specific stocks then. Mitesh, for the last hour, what would your picks be?
So I have one sell, which is and one buy. A buy on India Mart with a stop at 2640 for targets of 2760, and L&T is showing signs of a pullback and cool off. So L&T is a short term or a one today kind of a sell. Keep a stop just about 3590. Look for targets of 3400.
Okay, thanks a lot for that. Well, market expert Prakash Diwan is joining us now to tell us what one should be doing in the last hour of trade. Prakash, hi, welcome to the show. Well, so many stocks in focus, but I guess, all eyes will be on the banking names. Now, what's interesting today is that a lot of PSU banks have come under profit taking. So, whether it's SBI over the last couple of days, Punjab National Bank as well. Today, even in private, something like an Axis Bank is down about 1%. But would you buy any of these banks on a dip?
Good afternoon, Sonia. So I think banks have just started to kind of get their act together. On the stocks, that is. We've seen the kind of, interest that's building up towards some of these private sector under-owned banks where there is a very clear catch-up that's potentially available. And amongst that, if you take the hype around HDFC Bank away, I think Axis, ICICI, some of the smaller ones like Intersect definitely stand a very good chance to participate in this rally. So, I mean, these are typically market leaders with a lot of strength. The sector has been out of favor. It's getting that favor back. So I would be surprised if, every time Bank Nifty kind of charges up another 1,000, 1,500 points, some of these banks will make their new highs, retest their new highs. And that's the way the story is going to pan out. Of course, there are fundamentals. I keep on saying, credit expansion because of private sector capital formation is around the corner. We've already seen signs of that. The budget will probably give more clarity and depth to that. And then, of course, you have the interest rate softening cycle happening maybe end of this calendar year, or it would begin with early Jan or something next year. So everything kind of starts falling in place. I don't see any reason why banks should participate in the next leg up of this. Of course, the market itself is a bit frothy on the other side, but banks definitely seem to be giving you some sort of a comfortable potential to move up.
Right. Prakash, I'm looking at a couple of stocks from the consumer space. In particular, the beauty and wellness space. HUL, for instance, is now declining. In fact, this morning, at one point, it was below the 200-day moving average as well. From the highs that we recently saw, the 52-week high, the stock is down about 12%. On the other side, we have Honasa, which is Mama Earth, which is doing extremely well. So if you just take a a 1 month look as well, HUL, while, through its ups and downs is up 5%, Mamaearth has moved 10%. And from the time Mamaearth listed itself, the issue price was what, 324. It's a good 30-35% gainer. It's growing much faster than everyone else in the industry, has margin levers going forward, but also is trading at expensive valuations. How would you view Honasa from here?
So, Manga, very clearly, the answer lies within your question. Honasa has a very strong franchise, the strength that it derives from its product portfolio. They've also started expanding the product portfolio, and most of the new additions, if you see, are fairly high margin accretive. So, they're getting all of that in place, but it's just a case of coming up with an IPO much earlier than all your growth would start kind of, looking promising. Had they come up with an IPO with these kind of numbers and not, last year, things would have probably been different in terms of acceptance. I would not really want to buy into something like this as yet. Of course, turnarounds are something which can happen very sharply. But, the options that are available, alternatives that are available within that space. I mean, you would probably have a Nykaa doing far better, and the way it's kind of consolidating on the brick and mortar network also. It'd probably have a slightly better chance than Mamaearth in that sense. So I know I like this. The path to profitability is getting established and defined, but you'll still have to give it some time. The new age businesses that have floundered and recovered in the past, led by Zomato, I think that pack has far more salience in terms of what you could look at if you wanted to go into some sort of a business like this. So delivery, of course, is the one that I keep on talking about. See where it's moved from 240, 250 to almost 400 plus. So it's kind of a space where everybody has a different cycle and stage to kind of move into. And from that perspective, you'll have to wait for Honasa to actually participate in a very wholehearted way.
Speaking of new age consumer companies, guys, did you realize that now Swiggy Instamart is not just groceries and personal care, it's beauty? I got the shock of my life. I mean, and not because you can buy lipsticks on Swiggy now, but just what it might mean in terms of the disruption that the sector is in for.
Did you know you can even buy clothes on Blinkit now?
I bought my T20 jersey from Blinkit. And, that's the beauty of quick commerce. And that's why they're valuing it as much, right? Yeah. When you started out, everyone thought that maybe the assortment would just be things that you would need immediately, a few knickknacks here, there, some medical emergencies, etc. But now, the kind of assortment that these guys are selling on quick commerce is incredible. Case in point, the latest phone was launched on Blinkit, and you had the latest PlayStation, which was launched on Blinkit as well.
Wow.
The reason for which was what? If I've made the purchase decision in my mind already,
then
so why wait for it?
I want it right now.
So I just want it right now. Instant gratification, and that's exactly what quick commerce is.
But then that got me thinking about the kind of moat that, the likes of Nykaa would claim. That is no longer a moat. Absolutely not, right?
Well, that may not be a moat from a long-term standpoint. But then again, quick commerce has its limitations as well. It can't obviously give you the entire assortment in 10 minutes. So if you're willing to wait, then maybe never say never. But if you're willing to wait, then get more products, etc., then let's go about that.
Okay, well, let's. Yeah, I know. It's crazy. It's crazy what's happening with quick commerce. But let's move on. Adani Group stocks are in focus. Jefferies met the management of the group. Hormuz is here with the key takeaways. Hormuz, over to you.
Well, the Jefferies met the management of the Adani Group, and plenty of takeaways specific to the stocks as well. But we'll start off with the group as a whole. And they're saying that the group as an entirety is eyeing around $100 billion in capex over the next decade towards energy transition and towards digital infra. And it says that it is viewing its leverage position to be strong enough for the next leg of growth. Now, what the management also said that it is looking to capitalize on the large consumer base that it has when it comes to Adani's infrastructure platform business. So that is something that it wants to capitalize on. So $100 billion is the big number that the group is eyeing. Now, when it comes to specific stocks, I start off with Adani Enterprises, the flagship company, where Jefferies has a buy recommendation there. The management of the company there highlighted the fact that it is expecting a gradual rollout of the green hydrogen ecosystem, and that the setup will be the group's most capex heavy venture. So that $100 billion number that they're talking about, most of it might go to this. And the airports business should also benefit from the growth in traffic and in non-aero trends as well. When it comes to copper, they're saying that their copper project was recently commissioned and the work on the coal to PVC project has just begun as well. The management, when it comes to the debt levels, the management said that they don't expect the net debt to EBITDA crossing levels of 5 times during this capex phase. Now, when it comes to Ambuja, the management, the Jefferies here has a buy recommendation here as well, and the management is saying that the expansion plans that the company has envisaged, they are on track, and they continue to guide for an EBITDA per ton level of 1500 rupees is what the management is guiding for, and they have a plan to consolidate all the cement companies under one head in the medium term. So that is a bigger takeaway from the Ambuja management. From Adani Energy Solutions here as well, Jefferies has a buy recommendation. The company here said that they are aiming to construct close to 17,000 crore of under construction transmission assets by the end of FY26, and they have indicated that there is a 1.1 trillion rupees TBCB pipeline in the next 12 to 15 months, where the company currently has a 16% market share. And when it comes to smart metering, remember now these smart metering stocks have been in the focus all through this year, and they are saying that this remains an exciting opportunity as well. And within the smart metering space, they have already executed projects worth over 27,000 crore rupees. And lastly, for Adani Green Energy, Jefferies says that they have an installed capacity of 10.9 gigawatts as of March 2024, and another 11 gigawatt projects are under construction as of now. The management says that they are guiding for a 6 to 8 gigawatt per year capacity addition each in FY25 and in FY26, and they have reiterated their stance of raising their capacity to 50 gigawatts by FY30, including 5 gigawatts of pump hydro projects. So plenty of commentary coming in from all Adani Group companies, but the big number is the $100 billion capex.
All right, got it. Thanks very much, Hormaz. Very interesting note there coming in from Jefferies. Let's get Prakash's views. Prakash, I'm not sure, if you're a fan of many of the listed entities from the Adani Group or not, or if you like them. And a lot of people seem to find relative safety with ports, considering their marquee assets. What are your thoughts on any of the group companies?
No, absolutely. I think ports is the one that's demonstrated a very strong organic growth chart till now, and we've seen the execution has been absolutely superfluous when you compare it with some of the other projects that the large companies have undertaken. But what's the, if you ask me, the most promising piece today within the Adani Group actually resides in the unlisted areas of Adani Enterprises. And it's extremely difficult to put a value to it unless you do a sum of parts, which is really thorough and detailed. But if you look at the airport business, you look at some of the data center business, you look at the new energy business, all of that sits there at this point in time for me. And I think at some point, the management will start wanting to monetize some of this by a smart demerger route or some sort of a subsidization, which gives them an opportunity to list some of these companies. So that piece is going to be the most interesting, because the rest of the business have reached a mature stage where they will kind of grow with very clear, defined metrics. So I would definitely look at Adani Enterprises in a very different light. And this note actually brings out some of the salience that is there within the entire group, which actually dovetail into this thought. So we'll look forward to that. And at some point, I think the monetization effort will actually be underway.
All right, so that's about the Adani Group. Meanwhile, this seems like a market where, you are seeing a lot of luxury, high-ticket items being bought into. So we have Thangamal Jewelry, which is now up 15% as we speak. Most of the gains accumulating in just the last 20 minutes or so. So Thangamal Jewelry has done extremely well this afternoon. The other one which is doing well is Ethos as well. Ethos is up around 5.5%. Remember, this has been a week for jewelry stocks. Earlier in the week, we had a Motilal Oswal note saying that there is higher propensity towards the organized players in the jewelry space. And this morning, Pankaj Tibrewal did speak about the luxury space, which one can play as well in terms of consumption. Ethos is the one that sells premium watches at an average price of close around 1.9 lakh rupees odd. So those are high ticket items. Let's talk about low priced items which give us as much joy, and this is bhujia, chips and gathia that we're talking about, the ethnic snacks makers, all of them doing well in today's trading session. We have Bikaji up around 1.5%, Gopal Snacks about 2.5%, Pratap Snacks about 9%, ADF Foods, the ones that make Act 2 popcorn, up around 9% as well. There's an initiating coverage coming in on Bikaji this morning from Nuvama. They've initiated coverage on the stock with a buy rating and a target price of 885 rupees. And the rationale is pretty clear that it is a rapidly expanding Indian savory snacks market in which Bikaji is gaining market share, is the third largest player in the organized ethnic snacks market, it has 9% share. But, the salience that they have of larger packs, which are family packs, is 60% of their overall sales, and they are the market leaders out there. So it's not for individual consumption, for family consumption. They're they're the brand, and they're leader in core states, which is Rajasthan, Assam, and Bihar, and they're looking to increase their market share in these states itself by about 1 to 2%, while focusing on other states as well. They've invested ahead of demand, so with asset utilization or capacity utilization increasing going forward, the return on capital can actually increase all the way up to 32% by FY27. So as a result of which they find this favorable. But looking at this and the rapid acceleration towards packaged foods itself, we're seeing traction in all the other names too.
Okay, thanks a lot for that. And traction and
serious business, clearly.
Traction in my hunger as well. So,
by the way, unlisted Haldiram's, there were reports that it's valued at around $8.5 billion. That's almost as much as Tata Consumer right now in terms of valuations. But the average selling, the sale of all the three Haldiram groups put together is actually a lot more than Domino's, McDonald's, and Burger King put together. So obviously, the consumption
never take your bhujia and your chaat lightly.
Never.
I mean, coming from a person who's from Bikaner,
salt.
Yes, I'm from Bikaner. Bhujia is never side of plate; it's always center of plate.
Okay.
Explains that valuation then.
Well, Prakash Diwan, your thoughts on all the bhujia eating that's happening and also the stocks surrounding it?
Oh, absolutely. I think I agree with Mangalam. This is ethnic snacks is getting to be much more mainstream than what it used to be earlier. And still, you'll be surprised, the organized market is just in its mid-teens. It's not even kind of crossed that 20% Rubicon. So there's much more that could come in terms of market share gains. But let's look at valuations. Some of these companies have had a phase where Pratap Snacks, for example, it kind of came down on valuations from its lofty levels. The earnings caught up. It became fairly well balanced, but then again, it's become expensive. So, and that's the reason why this brokerage note that Mangalam was referring to also will not be in a position to look at price objectives which are incrementally very high, Sonia. So you will have to give it space. You will have to give it time. So both these things, but it's a lovely segment of consumption which will probably be much more robust and the kind of inroads that they make in terms of segments. Whether it's through price point changes, whether it's through new SKUs, all of that is kind of helping them get a stronger foothold. So I don't see any reason why you can't look at it, but you need to be comfortable with the valuation, which in some of the cases are fairly stretched. So we'll wait for dips as a classical response to this.
All right, wait for dips. And also what it does is it allows people from other parts of the country to get a taste of what is prevalent in some regions of the country. So sitting in Kerala, you can probably enjoy the gathia of Gujarat if it's an organized player, or the otherwise you can, if you're in Bengal, maybe call for a bhujia from Rajasthan and a bikaji.
Now suddenly, when you mentioned Bikaner, I remember why the Bikaner wala near, my original residence in Delhi was so popular. So yeah, it's pan-India.
Right.
Pan-India appeal.
Let's take a bhujia break. We come back. On the other side, we have Pashupati Advani of Global Foray on the other side to talk about markets and investments. Welcome back. A bunch of stocks picking up now. We have Suntec Realty from the broader markets now at the high point of trade. Real estate has actually been doing well for the last few trading sessions. Raymond, which is now more of a real estate company than just a textile company, doing extremely well as well, up around 6.5%. And we're seeing some traction come by on a couple of these other names as well. V-Mart Retail, for instance, up around 3.5%. Good time to get in. Pasupati Adani of Global Foray joining in to give us his views on the market and the themes that he likes right now. Afternoon, Pasupati. Always a pleasure speaking with you. How do you feel about the market right now? What is it that you're liking? What is it that you are uncomfortable about?
Well, what I'm seeing, like as a helicopter view, is that basically the FIs are kind of still cool on India because they've got huge profits and they've had losses in other countries, particularly in China. So they're booking profits against their losses in China and Russia over the time, and that's why we've been seeing exodus. On the other hand, we've got local money that's coming into SIPs with a vengeance. Huge numbers, getting larger and larger every month. So it's good that the savings of the retail public is coming into the markets in a if you call it a derivative way rather than straight in stocks. And what we are seeing is a sector shift. I mean, we are seeing people in countries where the markets are not really doing very much, and they're looking at India in a positive note, and they're also coming into India in defensive stocks. So, obviously the first place people look is the big index, and, what's in the big index? First of all, big banks, IT, oil and gas, and some consumer durables, and that's most of the index. So that's where we're seeing some of the action, more into the defensive stocks rather than the others. But we are seeing some movement, new money coming into indices.
New money coming into the indices. Pashupati, good speaking to you after a while. Here on the channel. Thank you for taking the time out. We're heading into the budget as well. Any high expectations this time around, and any sectoral expectations? Manufacturing, infrastructure, affordable housing?
So definitely the aim of the government is to get the private sector to spend. As far as the government is concerned, they're continuing to spend. The infrastructure spend is still coming. So therefore, you're still seeing movement in cement, steel, construction material, and also because they've got a message to spend on defense. So again, all the defense stocks have done really well and will probably continue to do well. I am not seeing too much. There is some. I'm not seeing too much movement in private sector to start scaling up. And one is because they made it difficult for the banks to give money, but also that they haven't actually decided to come in with a vengeance. So until that comes, we're not going to see a huge movement in the market upwards, because that would be a confidence that, frankly, I'm seeing hidden. But at the same time, you're seeing real estate doing well because people feel that we're prices are going up and they're firming up, and the sector has cleaned itself up, and therefore the organized realty will be doing well, and we're seeing that in the prices. So it's going to be new sectors coming into vogue, not rather than the old ones, and I think that's what's going to make the market really interesting.
Ashwati, hi, great to have you on the show. So what are these new sectors? Hi. So, looking for markets to be interesting. So what could be new?
So as I said, real estate was hammered down because, there was a lot of things happening in the sector. And now real estate is coming back into fashion. IT has been hammered. I don't think that's going to churn. I saw earlier in the program that you got our good friend Salil coming on the program later to talk about Infosys. But I think the IT sector is tough simply because you've got AI, and now what I've told is a new derivative called AGI, which is where you get computers to write the software to do AI. So that's the next derivative. So, I think the IT companies are going to have some issues. But again, banks, we're having some shift from the PSU banks to the private banks. A couple of the larger private banks have not really performed too well, HDFC Bank and Kotak. So maybe, there's a chance of movement in the other private banks like IndusInd and Axis. But, that's another shuffling of the Nifty Bank Index, which has to happen, because I personally feel that there's a lot of fintech companies that are struggling, and that's going to come back on the banks. But again, they're new sectors, like you mentioned jewelry earlier in the program, gold is going up. So all jewelry companies naturally are going to do well, but I'm not seeing retail public coming and buying jewelry like crazy, but now we've got festivals coming. So let's see how they manage those over the next 2-3 months. So it's interesting times. And again, this is a market which has been for stock pickers. And therefore, you have to pick the right stocks, and those are the ones that are going to really do well.
What about the SMID space, the small and mid-cap space? Are there any interesting themes out there? Because, like you said, jewelry, now you have stocks across the spectrum. You have Titan on the one end, and you have Thangamayil Jewelry on the other, with Kalyan and Senco somewhere in the middle. So how do you pick stocks? Like you're saying, it's a stock-specific market. So how do you back these themes, and what are some of the stocks that you like, if at all?
So actually, I'll take an analogy of jewelry stocks versus like broking stocks. Now, some of the more transparent brokers are saying these are our number of trades. This is the number average value per trade, and trying to open up their balance sheets to be more sort of transparent. Maybe the jewelry companies can start saying, this is our raw gold inventory. If they do that, all of a sudden you'll have a differentiator. You'll know who's actually holding gold and who's not. And then, given that gold price seems to be doing well, I think that that will also take a new turn and provide a differentiator within the jewelry stocks. I mean, I honestly don't know how much gold Thangamayil Jewelry has in stock, but if it's like got tons and tons, then maybe it's a stock worth looking at. That's just my thought. You're talking about also mid caps. One of my favorites was Indus Tower, because I actually believe the telecom sector is going to continue to raise its ARPUs, and that's going to be good for all of them. And all of a sudden, it got put into an index, so it jumped up, and now all of a sudden Vodafone decided to sell off a big chunk of their holding, so it's come back down again. But I think that's a stock that is definitely worth having. And as telecom grows and as more and more people use data and more people use 5G, the towers are obviously going to be needed. And they're the leader. They are the publicly listed tower company. So I think definitely it's participating in the telecom sector.
Okay, that's Indus. That's interesting. Pashupati, give us another name, one or two more names, stocks that you're finding interesting at this point, or stories that are really capturing your imagination.
Well, I have had fun being up and down in Paytm. It looks like Paytm had a lot of things going for it, and then they lost their banking license, and now it looks like it's getting peeled into pieces. So actually, I'm not as wild about it as I was. I actually lost money in it, so because I thought that the business model seems to have gone haywire after they lost their banking license. But again, I think at some point, once they're now talking about selling off their theater and tickets business, it'll probably come down a little bit once that sale takes place. And then, maybe there's a chance that it'll come down, because at the end of it all, I believe the marketplace has some value to one of the larger players. And what that value is, we'll see. But, I think it's maybe the value is 50 rupees lower or 75 rupees lower. But at some point, it's going to be interesting to buy it again.
Pashupati, do you like the guys who could be buying Paytm's theatre and tickets business? I'm talking about, of course, Zomato. We were just discussing, before you joined us, how this quick commerce is a whole different world. You can, from your toothpaste to your clothes to your shoes to, what have you, the biggest brands, everything's out there. And of course, the next big thing for the market is going to be the Swiggy IPO. So what do you think of Zomato at this juncture?
They're all going to do fine. They're all going to do great. And what they're all doing is going to other product deliveries. And the delivery last mile is, again, always been a challenge in India. The Chinese seem to have cracked it, because in China, they're so used to getting delivery in half an hour and 1 hour that, if you have if you say, I'm going to deliver you tomorrow, you're not going to get the click. And I think we're heading there. It's going to take time, and there's going to be a lot of blood on the streets. But I don't know how they've done it, but it's absolutely fantastic the way they do it. And, I remember maybe 3-4 years ago meeting someone who was very senior in Carrefour in China. And he said, we can only do business if the person is within 2 kilometers of our stores. Everywhere else, some other... He didn't call it that, but a kirana wala was doing the delivery and getting the contract. So, it's a very difficult space. But again, if they're focusing on last mile, they will do fine. And, certainly the number of players is going to get less, and therefore it's going to be more interesting. And the ones that survive are going to do really well.
Okay, well, thanks a lot for joining in, Pashupati. Have a good weekend, and thanks for being with us on the channel. Thank you. That's the word coming in on the market and on individual stocks and sectors. Market, by the way, is flattened out completely now. So just a day of consolidation after all that to and fro. We'll take a quick break. We still have about half an hour, 20 minutes to go before the day comes to an end. Stay tuned.
Welcome back. You're watching us here on Closing Bell. As always, let's get you what the dealing rooms are saying in an otherwise consolidating market. We're seeing some traction in a lot of stocks. Kalyan Jewellers, we were talking about it, just spiked up right now. Vertical up move is what we're seeing on Kalyan Jewellers. So that stock's up around 4.5%. Also, PVR Inox is one of them which is doing well. Granules has been doing well. That's one we'll keep an eye out on, alongside something like an Escorts Kubota, which too is sitting with a 4% gain. So individual pockets of gains here. What are the dealing rooms saying? We have Nimesh, as always, joining in with an insight into that. Nimesh.
Hi, Mangal. Yes, it's a day of consolidation, but it's extremely volatile as well, right? I mean, Nifty is all over the place since morning. We've seen some recoveries, but again, that got sold into. So that's the kind of a day. But in terms of flows, again, it's going to be a mixed day of trade. But do remember, there is this FTSE and sensex rebalancing. That's going to have an impact on the institutional data today. So that's something to watch out for in the post-data numbers. In terms of sectors, telecom, IT, and a bit of pharma. That seems to be the place where there's a bit of buying interest back from larger institutions. However, the big overarching theme has been the large block deals, which we saw a big amount of blocks happening this week. And the sense I'm getting is, that trend is likely to continue maybe next week as well. So, that supply is going to continue from promoters is what my sense is. But today seems to be a day of consolidation. But I guess there is a Friday factor as well, and we're seeing some bit of profit booking as well in mid-caps and broader market stocks.
Okay, Friday factor and profit booking. Nimesh, what about individual stocks? What are we looking at this afternoon?
Well, Sonia, as I said, the trend of promoter selling continues. The first stock is Gujarat Fluoro. Well, the stock has recovered from intraday lows, but there is a large block, 1.2% equity got changed hands. I understand the promoter entity was a seller in today's block, and some domestic mutual funds were buyers. So again, the disclosures will be quite interesting in Gujarat Fluoro today. The second stock is Vedanta. Well, the stock has been in a very narrow range today. The stock has actually moved up a bit, but now I understand there's going to be a large block deal in Vedanta very soon. Again, the trend of promoters and promoter family members selling, that continues. So maybe a large block in Vedanta as well. The third stock is SAIL. After long-term some bit of traction seems to be back in SAIL as well. The volumes are on the higher side, and I understand a leading domestic mutual fund is an active buyer as well in SAIL of late. And the last is Bandhan Bank. The stock is smartly recovered from the recent lows of 170, 180, now at almost at 210. There is a bit of buying interest as well from larger HNIs, is what I understand. But the big trigger point is the appointment of the new MD and CEO. Remember, Ghosh's tenure ends in mid-July. So before that, there is a high anticipation that the announcement will come. And that is the next big trigger for Bandhan Bank.
All right, Himesh, thanks a lot for that. So those are a bunch of stocks which are on our radar. Bandhan Bank in particular, some flows at the HNI desk. Kalyan Jewellers, we were just talking about that with a gain of almost 3.5%. It's extending right now and volumes are picking up as well. So that's something we'll watch out for. Almost 6.5% up move is what we're seeing. It seems like a vertical up move that, the stock has just taken off, and it's been a big mover. In fact, over the last 12 months or so, it's more than tripled, 3.5 times from, the levels that it was earlier, a little over 150, and now around 460, currently adding on more gains. Good time to get in Mitesh Thakkar to tell us what to buy or sell today for a reverse trade on Monday. Mitesh.
So Indigo is something which has come on my radar. I think, after a few days of pullback, we've seen this stock try to get back into up move again. So BTST here, keep a stop below levels of 42.85, look for a 43.50, 43.55 kind of a target for tomorrow. And on the selling side is, on the STBT side rather, is oil refinery, that's IOC. Take a STBT with a stop at 168 and look for a target of around 166, 165 after.
Do you have a view on Jubilant Food, Mitesh? The stock is higher in today's trading session. It's recovered from the lows, defying the otherwise weakness that we're seeing in the mid-cap end of things.
So Jubilant Foods, Mangalam, I think the chart is improving drastically. In fact, if you see the weekly chart, the stock has rallied from 460 to now at 560. The last swing high was around 580, so that is the target which I'm looking at. But in case we start getting past 580, then I think we'll even look at the monthly chart turning positive and look at a revised target of 620. So there are two targets, 580 and 620 here, but that's from a slightly more long-term kind of perspective.
The reason why I asked about that is because this morning we got a note from Macquarie on the consumption sector, and they said that the government has actually announced an increase coming in for the minimum support price for Kharif crops, does well for rural consumption. The key crop this season has been paddy, which has seen a 5% increase in MSP. But now what they're pinning their hopes on is some budgetary support for the consumption sector coming in. And were that to happen, it will boost consumption for urban masses. So in a situation of, any sort of improvement in urban consumption, they believe that there is an upside risk for same-store sales growth for the QSR space. And as a result of which, at a precautionary level, they've removed Jubilant Food from their marquee sell list. Remember, the stock has already seen a bit of an up move from the lows, as Mitesh pointed out as well, from 450 all the way up to 550. So with this outperformance that we've seen, maybe there was more upside risk, and as a result of which it's been removed from their marquee sell list. And that explains the further upside that we're seeing on Jubilant Foodworks.
Okay, well, Prakash Diwan is with us, so let's get his view in on this. Prakash, Jubilant Foodworks, any thoughts there?
So, we just spoke about ethnic snacks and how some of these big brands actually add up to much more than all the QSRs put together. But nevertheless, Jubilant Foodworks seems to have bottomed out on a few metrics, the business metrics. Primarily, the cost control, the cost rationalization that they did. If you see the menu, it's much more leaner, fitter, and arguably, more profitable for them. So so what they've done is all the frills have been actually done away with. And if this price hike for the input side is not such a inhibiting factor, my sense is that their revenue growth will probably turn into far more profitable business for them going forward on the SSD also. So the single store sales growth that we keep looking out for, even if it's not very high and superlative, will probably add up to a much better bottom line. So from that perspective, it's probably attractive. But then you'll have to have the patience for the business to transform, which means that you'll have to hold on for at least the next 6 to 12 months before the real transformative thing comes up. But yes, quite positively inclined on this name, Sonia.
Well, a few stocks going with big cuts into the weekend. Torrent Power, that's the one that should come up for you. It's a big cut, and it's a vertical downtick that we've seen, down 7% now. There has been an update on the exchanges, just trying to find out what it is. In the meanwhile, RVNL has emerged as the lowest bidder for a project worth almost 200 crores. So that stock's rising, but Torrent Power, definitely something's up. The stock down 7% and seeing a lot of volumes on the downside as well.
Yeah, that's actually quite a huge fall. I don't think there's been not that I've seen a block. Perhaps some other news announcement. We'll try and get to the bottom of it in just a bit. 7% absolute decline coming in on Torrent Power. Prakash, by the way, I just wanted to check, have you had a look at Time Technoclast?
Oh, yes, of course.
Yeah,
So
it's really celebrating this this hydrogen win, right? They're doing cylinders for hydrogen and they've got the government approval. What thoughts on this company and the stock?
No, absolutely. If you look at this history, and it has a fairly long one, they've messed up on certain acquisitions that they did when they were trying to actually create a global footprint about 7-8 years back. That entire structuring that they thought would help them has actually been undone and reversed, which means that there's been a lot of stress on the balance sheet. They've kind of been able to get out of that as well. And now they seem to be, all this while we were waiting whether the LPG domestic usage cylinders would actually transform into composite cylinder usage, but that's not happened. Fortunately, hydrogen, starting from a much cleaner slate, doesn't need a little bit of reworking that LPG cylinders would need, and hence decision making has been far more efficient and faster. So I think the time for composite cylinder announcement is very positive. I would believe that this gives them the right to be able to become like the poster child of this new age cylinder material that they're talking about all this while. And that is what will kind of fetch them some premium. So earnings will come, P multiples will expand, all of that will probably fall in place. So this is a great start. I don't see any reason why this will not have a rub-off effect on their other businesses as well. So quite positive. Of course, it's run up in the last 1 year quite significantly in anticipation of all these developments. But I think the story is just begun. But you could definitely add up on dips since, as I said, it's run up quite a bit in the last 12 months.
Okay, well, thanks a lot, Prakash, for that. We just have about 10 minutes left for the markets to close. John Chambers, who's the chairman of the US-India Strategic Partnership Forum and former CEO of Cisco, says that we are in the age of AI. In an exclusive chat with Shireen Bhan, he says that AI will be pivotal to economic prosperity across geographies. As we slip into a break, let's listen into that conversation.
It's not just the age of AI, it's the age of AI and agility.
Everybody can either disrupt or get disrupted, but the same thing's going to happen to big companies. People compare it to right before the dot-com bust. I think that is wrong. Now, don't misunderstand me. Are there going to be some spectacular train wrecks with AI and companies that just missed the mode, got overfunded, etc.? But I'd say, using an American term, I'm trying to learn cricket, as the Olympics hopefully will come to India in the mid-30s coming up. We'll see if we can win that one. But I would compare it to being, in baseball terms, the second inning. So where the internet growth, etc., clearly peaked and there was overinvestment in certain categories, Cisco came through it fine, but it was very painful. I think we're in the second inning in terms of what AI is going to represent. I think this will be the decade of AI, and it will be the century of AI. And it will be the foundation to determine economic growth of companies and directions.
Welcome back. You're watching us here on Closing Bell. The Nifty down about 90 points right now. The Nifty Bank is the one which is leading the decline, down about 0.33%. It's been wobbly. It's been in a range. Dips are being bought into and rallies are being sold into. That's exactly how the day has panned out in today's trading session. We'll have about 90 points of decline at close. But, you know, it's been a good week nevertheless for the bulls. A lot of supply has been absorbed by, the institutions, the paper supply that was there. Banks have broken out, and the Nifty Bank will still end this week with a decent gain, close above that 51,500 mark as well. All eyes, however, will be on what takes place in the GST Council meet that will happen tomorrow. It's elicited high interest on hopes that some big changes may be announced. In fact, the fertilizer pack, a lot of these stocks are up anywhere between 30 to 40% this week. A couple of these online players, online gaming players as well, have been higher. So what are the expectations? What's likely to be announced? We have Tim C joining in with all that roundup. Tim C.
Well, that's right. It's a packed agenda for the GST Council. The Council may consider a proposal not to levy higher GST when lower rate was paid due to a general industry practice leading to retrospective demands. Experts say that this particular law amendment is going to give relief to sectors like online gaming, shipping lines, foreign airlines, insurance companies, IT, etc. Also, other items on the agenda include recommendation to reduce GST on fertilizers from 5% to exempt here. Group of ministers on rate rationalization could lead to further detailed study. Also, Council could bring in several other clarities for sectors like telecom, highway builders, insurance, ESOPs, reducing TCS for e-commerce operators, insurance, aerated drinks, tobacco products, excellent neutral alcohol. Council may also bring anti-profiteering measure to a logical conclusion. And yes, bringing in mandatory Aadhaar-based biometric verification for new registrations. Let's see what all Council decides.
Indeed, Tim C, thanks a lot for that. Let's see what all comes this time around. A bunch of stocks, can't keep your eyes away from that. We have Pfizer from the broader markets, which has again seen a big dip. Most of the cuts have come by in just the last 15 minutes or so. In fact, not even 15 minutes. Last 3 or 4 minutes, we've seen a big cut in Pfizer. So the intraday chart of Pfizer comes up for you at the low point of today's trading session. Ramco Cement has been one of the weaker stocks today at the low point for that counter as well. And as has ICICI Pru, actually. ICICI Pru too ends the week at the low point of trade. What is in store for the markets in terms of earnings and what should one do? Pankaj Tibrewal of Ikigai Asset Manager joined us today to give us his perspective. He said the next 12 to 18 months are where you focus more on capital protection rather than wealth creation because of the big rally that we've seen across the markets.
Today, the contribution of mid and small caps as a percentage to overall market capitalization stands at about 36%. And their profit contribution is about 25%. So the divergence is clearly there between the profit as well as the market capitalization contribution. We believe that the earnings growth after a long time is starting to slow down. Last year, NSE 500 companies grew at 30% from a FY23 base. I think this number could be about 14-15% this year. So I think we need to take cognizance that earnings have started to slow down in the broader markets. And I think valuations are not factoring in that. We analyze the data very carefully. The government lost about 60 seats in the rural areas. And that's a large number. Our sense is that probably a part of that expenditure, which has been flat for the last 4-5 years, will see an uptick. And on the same breath, the capex expenditure, which was at about 3.5 lakh crores, is expected to be 11 lakh crores. Consumer durable space probably can make a comeback. We have seen very strong summer, and that's likely to sustain going forward as well. 3-4 sectors where we believe that there's a lot of margin of safety. The first one is private sector financials. We believe that they have been continuously growing, delivering good numbers. And there is reasonable margin of safety when we look at their franchise and when we look at the growth potential ahead.
Right, wise words coming in from Pankaj Tibrewal. Interglobe Aviation, that stock surged. In fact, it was one of those buy today, sell on Monday calls from Mitesh. So that stock's moving higher, and this despite oil prices moving higher as well. So that's only telling you about the demand that is there, and the kind of occupancies in the flights. So Interglobe Aviation continues to do well. The other one that is now picking up is Oil India. Oil India is higher. Upstream oil companies typically benefit from the increase in crude prices. Now Brent is closer to $86 per barrel, not near uncomfortable levels, but definitely good levels for some of these upstream oil companies to make some money. And the one gravy train that continues to roll on is the entire railway space. So we have Titagarh Rail Systems, another day, another 7% up move that we've seen on the stock. I mean, just look at it. It's up around 13-14% in the month of June itself so far, despite all the volatility. Add to that, this year, the first 6 months of this year, we've seen a gain of nearly 53%. And if you look at the stock over the last 12 months, more than tripled. And over the last 24 months or so, it has given you more than 500% return. So a big mover in the railway pack, Titagarh Rail Systems. We were talking about how RVNL gained on account of a 200 crore order win. Railtel is the other one, which is up around 10% as well. Prakash Diwan is still with us. Prakash, at what point does this train stop? I mean, when does it look expensive?
No, I think most of the stocks are expensive, Manglam. It's just you need to understand vis-a-vis historic order execution and order booking, what's the positive correlation. And from that perspective, some of the ones like Ircon, to an extent, rights, they are the ones which will continue to do very well, even if the others kind of start seeing a shakeout. So in most cases, we've kind of priced in the earnings growth for the next 2 years. So the ones that probably have vulnerability in terms of executing what is expected in 2 years are the ones where the correction will be very severe. So you'll have to slice and dice from that perspective. But I think Ircon, rights, to some extent, RVNL definitely stand a chance to win. So I wouldn't be very worried about these.
Quickly, before we let you go, do you have a view on the telecom space? You've always been a Bharti Airtel fan. I know that you liked Vodafone at the price it was trading at as well. From there, it's seen a near 65-70% rally already. And shortly, a short while ago, we had Pasupati who spoke about Indus Towers as a play. Now, with the supply overhang having gone, the stock has actually seen a recovery from the lows. In fact, Indus Towers is now surging at the high point of trade. What of these three do you like, and how would you play it?
No, so I think Bharti definitely, as a stock is very promising. There's no doubt about that. But, I would go with the change that's happening in the tower business. Indus is, of course, fully priced, Manglam, but then there are smaller companies. And one of the very small companies in that space, with just about 1,200 crores market cap, is the one that we are very positive about. But it's too small to discuss at this point in time, but for another day. But I think that space is something which you will see allocations come to in a very profitable way. So quite positive on that.
All right, we'll leave you at that. Prakash, thank you so much for joining in. Have a good weekend. We'll see you on Monday as well. Time to wrap up on this edition of Closing Bell. Let's recap the way the market has gone. The Nifty, for the record books, closes about 110 points lower. That's the last tick, 23,450 on the frontline index. Led lower by the Nifty Bank, which is down about 0.5%, led lower by HDFC Bank and a couple of these other private sector banks as well. But that is not to say that, that's how they went in the week. In fact, it's been a very, very good week for the banking index. It broke out a couple of days ago and has actually managed to hit a fresh record high in the last couple of days itself. So the Nifty Bank actually ends about 3% higher for the week, notwithstanding today's profit booking. The Nifty absolutely flat. We've seen a fair amount of traction in the broader markets as well. So the Midcap index this morning as well hit a record high. And if you look at, this entire week, the Midcap index ends about 0.5% higher. The small cap index about 1% higher too. What were the stocks that did not do too well in today's trading session? We had L&T, which was lower, Ultratech Cement, which was lower, Tata Motors, Nestle. FMCG seems to be, back to its losing or underperforming ways. On the way up, it was the IT pack that supported the index, and that was largely on account of positive results coming in from Accenture. The broader market is where the action was. We ended with an even keel in terms of advanced decline ratio, and a bunch of stocks that did well. We had Granules, Havells, Vodafone Idea, PVR, Inox, and Alembic Pharma, alongside all the rail stocks that did extremely well. But on the way down, we did see some profit booking in fertilizer names ahead of the GST Council meet. Chambal Fertilizers, GNFC, Torrent Power saw a big decline in the last hour, and Coromandel as well. So all said and done, it was a week of consolidation for the frontline indices. The Nifty Bank breaking out. Alongside that, we did see some traction in a couple of mid-caps. Small cap index ending the week at another record high. With that, we will wrap up on this edition of Closing Bell. You don't go anywhere, because on the other side of this very short break is our Friday special offering, Editors Roundtable.